So dishonored check is where the bank, yes, refuses to accept our check for a number of reasons that may cause that to happen, dishonored check. So the bank decides that they're not going to encash the payee, yes, check that we have given to the payee. All right, and there are a number of reasons why that may take place. One is that the bank may decide that we don't, based on what happens, the check, the amount on the check is more than what is in our account. So the value in the check on the check is more than what we have in our account. So the bank would perhaps may refuse to honor that check. Another reason for the check being dishonored would be that the figures and the writing is different. We may write 10,000 and then in figure we have 1,000. So the bank would not be able to distinguish what did you intend. Okay, so the check may be dishonored for that reason. The figure and the writing, there's a disparity there. The other reason the bank would dishonor the check would be that the bank have a problem with the signatories. So the signature may not be clear, doesn't look like the normal signature. So they might dishonor that check because of the signature situation. And the bank may also dishonor the check if the check is outdated. So if the check is outdated, that means it has passed its useful life, then the bank would also dishonor the check. So there are a number of reasons, yes, that exist that will cause the bank to dishonor the check. All right. So dishonored check is another important concept in the process of dealing with bank reconciliation. The next concept that is important is the direct debits. And direct debits is really where we allow for the bank to pay our suppliers or our creditor, right? Our suppliers or creditor is going directly to the bank, yes, to get their payment, than they are coming to us to pay them. That's why it is called direct debit. Yes? So what we do is that we would have given the bank information, the particulars of this company. And an example would have been, let us say we're operating a bakery, and so flour would be a prime product in our operation. And there is this company that we are buying the flour from, and the company consistently brings in flour regularly, a recurrent basis every week, right? Instead of remembering now to write check all the time to this company, we can go to the bank and say, listen, I want you to give permission to Tom Stroke's company, yes, whenever they submit the invoices, that you pay them from our account, right? So it's a direct debit. Means that the company or the supplier or the creditor is going directly to the bank. And why it is direct debits? Because they are going directly and our account is being debited, right? Because our account will have our money on the credit side, and when they go and withdraw money, then it will be directly debited. The other two concepts that are of importance, ladies and gentlemen, as it relates to bank reconciliation statement would be unpresented check. Unpresented check. Now, unpresented check is where we have paid out money. Yes, we have paid out money and the persons to whom we have paid that money by virtue of writing a check to them, they have not presented that check to the bank. All right, so it's not reflected in our bank account that they have really gone to encash the check or to deposit the check with their bank. All right, so it is called unpresented check. That means the person to whom we have paid, write that check and paid to, that person did not take that check to the bank at the time when the bank statement is being prepared. Secondly, unrecorded deposit, they call it late lodgement or bank lodgement or unrecorded deposit. What that really means is that we would have received some check from perhaps customers. We receive, because they are paying us, we receive check from our customers, and we would have now taken them to the bank and deposit in our bank account. But at the time when we have brought in those set of checks to the bank would have already prepared, yes, the bank statement to send to us. So those checks that we have deposited would not be acknowledged, or the information would not be on the current bank statement. So that is why it's referred to as unrecorded deposit. Unrecorded means the current bank statement that is coming to us, it is not recorded in it, because the bank statement would have been prepared before the deposits were made. Or some persons call it the late lodgement. Same concept, right? So these are important concepts, ladies and gentlemen, that we must understand in dealing with bank reconciliation. We must now move to objective 3, apply technique to identify items. Now, our bank, so this is the cash account and this is the bank statement. Now, this is the debit side, the credit side. In the bank statement, debit column, credit column, and the balance. Now, what happens is when we are going to try to determine those items that are not in each statement, whether the cash book or the bank statement, we use a diagonal check. We use what is called a diagonal check. So, and the reason for that, before I go there, is that as we said before, the bank treats our account as a liability, because they're holding the money in trust. I say it again, they're holding our money in trust. So the money is not theirs, it is ours. So it is a liability. They're holding our money as a liability because they owe it to us. Again, they owe it to us. And that is why when we have money at the bank, it is shown in the credit column, in the credit side, that we have money, because it is treated as a liability. On the contrary, in our cash book, the money, it is our money, and we treat it as an asset. So it's on the debit side when we have the money. Okay? So now, if we are going to be determining if there are any items that are in either of these, or they are missing from either of these statements, we do a diagonal check. So we move from the debit, yes, of this, on the cash book, to the credit of the bank statement, right? And we do the opposite. We move from the what now? The credit of the cash book to the debit of the bank statement. We do a diagonal check. So if we're going to check, we go from debit of one to the credit of the other. Credit of one to the debit. Or we can start from credit to debit, or debit to credit. That is what we would have done, we do regularly, to determine the discrepancies that exist between the cash book, or our bank account in the cash book, and the bank statement. Ladies and gentlemen, I thank you very much for sharing with us today on this lesson relating to the bank recon. This is the part one of our lesson, and we want you to be able to understand these concepts very much so that when we go in deeper into the topic, that you will be clear on them. But we're going to allow you now to dissect, memorize, meditate on these concepts, and we will be coming back with part two to show you the practical operation of doing bank reconciliation. Thank you very much for sharing with us. Like and subscribe by clicking below or this lesson. Thanks again.